guys, welcome to the market channel. In this video I'm going to be teaching you how to trade futures either on Bybit or on Binance, but I will be using Binance exchange for this video, but this is also applicable across other exchanges. But in this video I'll be using Binance on how to trade futures and how to be profitable. So let's continue. Before we continue, subscribe to my channel right now if you have not subscribed, so as to get notification on more videos, and don't forget to put on the notification. Let's get started. So on Binance we have trade and we have futures. So we're dealing with futures today. So this particular trade has been running for a long time. So I already closed majority of the funds. I just left this running to see where it's going. So just ignore that. So this is the futures interface. So and in the futures interface we have what we call isolated or cross. We have what we call sell or buy. So buying is basically if you predict that the market should go up, so you'll be buying. That is, you are buying and expecting market to go up. Sell is whenever you are expecting market to come down, so you sell the market or sell that particular coin and you are expecting a market to just go down in the direction. So buying is for going up, sell is for coming down. Straightforward. Then we have isolated and cross. Cross means that, let's assume you open a position. Let's assume your account is order cross. Because I have a position, I won't be able to change it. So let's assume your account is on cross and you open a position, or let me use this particular position right now. So let's assume that my account is on cross and I open this position, and this particular position is running in loss. So if it's running in loss, then, and my particular, you can see the liquidation price there is 5151 or 5135, and market is getting close to my liquidation. If I'm using cross and I still have like 300 and something dollar in my balance here, as you can see, then the platform will use part of my 300 and something dollar to keep my position running until my 300 and something dollar exhaust. That if I did not set take profit or stop loss. So this particular position I have a stop loss. So but let's assume that I don't have a stop loss. That is what is going to happen. It's going to use my balance, the rest of my balance, to keep this particular position running until all my balance is gone. That is when the position will stop running, if the trade is going against me. But even if you have cross and you use a stop loss, then you are covered. But if you have cross and you don't use a stop loss, then it's going to cross over to your balance to keep the position running. But when you use isolated, it means that even if you don't set a stop loss, the liquidation price, you can see the liquidation price there. Once price gets to this liquidation price, only the amount that is inside a trade, inside this particular trade, will get liquidated. For example, now what is left after I already, like as I've already closed, taking a lot of profits from this trade, but I have what is left. I have $8.8 left in this trade, like the actual, like a morning, not the profit that is running. $8.8. So if this particular trade should continue to run in loss now, and I'm using isolated, only this amount I'm going to lose. So in summary, isolated means your loss is only pertaining or is only limited to whatever amount you use to open the trade. Why cross? If you did not set stop loss, your loss will cross over to your main balance and then use that to keep the position running until your main balance is exhausted. That is only if you did not set stop loss. So then the next thing, we have leverage. So depending on how many this leverage changes. For example, now let's assume I'm using Bitcoin now. Cancel. Let's go to Bitcoin features. Let me search. Okay, Bitcoin. But as you click on this leverage, now you can see this one have 150x. So it depends. Different coins or different tokens or different crypto have different leverage depending on the platform. So that's for that. Then this one is a single asset mode and multi-asset mode. So I would say just put on single asset mode, don't bother yourself, just to make things to have simplicity, just put it at single asset mode. Then we have market, we have limit, we have conditional. What you need to use here as a beginner, don't bother yourself too much, just know how to use limit and how to use market. Now for limit, is basically, let's assume I want to buy this particular Bitcoin now. It's currently at 64,000. I can put a limit. Limit is basically pending your trade. I can put a limit at once price gets to 60,000. Use everything my balance. You can, depending on the amount you want to use to place the trade, you can drag this to choose the amount to place the trade. So, but let's say but let's assume I'm using 100% of my balance. Let's say I'm not setting stop loss right now. And I click on long, confirm. You will see that in the open trade. You can see a pending amount, open or basic. So you can see a pending trade that is waiting to be filled at $60,000 for my Bitcoin trade. So that's how limits work, basically to pend trade. Why market means we are buying at the current market price. But I should click on market, I choose market. Let me go back to isolated. So if I choose on the current market, I use market and then I drag this 100% and I click on buy. Instantly, it's going to execute that trade and buy it at the current market price. Do you understand? So let me show you example. Don't worry. So I don't want to use that as a example. So that's what's going to happen. It's going to buy the current market price. So like I said, just know those two. The rest, you have trailing stop and the likes. Like you are a beginner, don't complicate yourself. Just know how to use limit and market. Limit is to pend, market is to buy at the current market price instantly, instant execution, no stress. So we have split tolerance. If you want like the percentage, I will say don't bother yourself about this also, but this one is very important. TP and SL. Before you enter any trade, you need to know how much are you willing to lose. How much can you afford to lose? Let's assume you are entering a trade with $100. Let's assume what you can afford to lose that is not going to attach emotion. Let's say it's $20. So which means whatever thing that you are trying to set, whatever take profit or your stop loss, make sure that it does not pass that $20 loss. So if you are setting a stop loss, let me use this current price. I'm putting market price. Okay, let's say 60,000. Let's see how much I'm going to lose. I'm going to be losing, that's a lot of money. Let's say 64,000. You can see I'm going to be losing minus $36. Let me say 34,200. I'll be losing for 34,100. I'll be losing $20. So then let's say my take profit is 67,000. I'll be gaining $437, $438. So if I'm okay with that, then I will click on buy. But don't just be changing price. Make sure you look at your chart. See where your support or your resistance is. Know where you want to get out or get in. So it's very important. So there are a lot of things that need to come into place before you start placing trade. You need to analyze your market very well. So that is where your technical analysis comes in. And once you are done with everything, then you place your trade. You can decide to set to take profit and stop loss later on. You can place the trade and then come back later on to set take profit and stop loss. You can watch my video on how to do that. So before I leave today, one important thing, this is just like the first episode for how to trade futures on Binance. I'll be releasing more episodes later on, how to analyze market, technical analysis, and others. But one big takeaway is that as a trader or a beginner or a professional trader, you must first accept that there is loss in the market, which means that you must be ready to lose money to make money. Even in business, you must be ready to risk some money to get a profit in return. So, but in trading, you must be ready to know what you can afford to lose, because markets will play with your emotions. And if you are not careful, you will lose all your money, all your capital, and you keep burning money except you do the right thing. You need to be disciplined. You need to have a good plan. You need to have a good strategy. Know what you are doing and don't let emotions come into your way. And don't forget to subscribe. Thank you.